Director of Education at T3 Live. Hope you're doing well. Hope your weekend's going great. We're going to talk about the market. I'm going to give you my take on the market. We'll talk about the daily watch list for tomorrow. And before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you're new to our channel, please be sure to download the free ebook. Link for that is in the description. Also, if you have any questions for us, make sure to reach out by emailing customer service info@t3live.com. If you find benefit in today's video, please be sure to hit the like button, comment, subscribe, turn on the notification bell. All right, here we go. So the market. When we talk about the market, it's hard to tell exactly what index we should be using. Is it the Qs, the SPY, or the IWM? The Qs are the top 100 technology companies in the NASDAQ, basically. The SPY, you know what it is. It's the S&P 500. And the IWM is the Russell 2000. They look different. I mean, the Qs and the SPY look alike. The Qs right now is the weakest, most bearish, broke the trend line. The SPY broke the trend line, but didn't break the trend yet, right? So broke the trend line, but not the trend. And the IWM is pulling back. So it's, again, they look a little different. When it comes to the Qs and the SPY, we had 3 red bars in a row last week to finish the week. So I'm thinking going forward, for this week, if we initially sell off, we would, if we sell off the first half of the week, we would probably rally the second half. If we get bought the first half of the week, I would think we sell off the second half. If we initially get sold, then I'd expect to rally. If we initially get bought, then I'd expect to sell off in the second half of the week. Basically, I'm expecting the weekly bar, when all said and done, to look something like this. Like these bars, that bar, a bar with some kind of a narrow body. Why? Because on the weekly chart, we have a wide range red bar. Usually after a wide range red bar, we get a narrow range bar. Usually, not always, but that's what I'm expecting on the weekly chart. Ultimately, I think the market topped, at least the Qs and the SPY, and I'm thinking that the Qs and the SPY should come back down to at least the rising 20 on the weekly chart. On the Qs, that's about 450. On the SPY, I don't know what it is about. On the SPY, I would say it's about 530 or so. So that's what I'm expecting. We will take it one step at a time, one day at a time, 1 week at a time. That's the right way to approach it. But that's what I'm expecting for this week. The IWM is a little bit of a different story because we had a beautiful breakout last week. That's the monthly chart. Looks absolutely beautiful, right? And on the daily, we're pulling back. So I'm expecting the IWM to be buyable if it gets down to the rising 20. But the SPY and the Qs need to be already kind of close to the 20 MA on the weekly chart. So it's a little bit tricky this week. It truly is. And that's why I said we're going to have to take it one day at a time, 1 week at a time. All right. In terms of the swing ideas, I have rarely seen as many broken trends, as many failed patterns, failed setups as I saw while scanning for the daily watch list this weekend. Like 90% of the stocks that I was watching, they already failed. Or the trends are broke completely. I'm no longer interested in them. 90% I would say. Which means, that leaves me with just a few things to watch for tomorrow. I did post my full daily watch list in the video description, so it's going to be longer than this, but those are the ones that I'm actually interested in for tomorrow. The BNED I like higher over either Thursday's high with a stop under Friday's low, so over 11.15, stop under 9.20, that's a $2 stop, or if you want a tighter stop, just over Friday's high, 10.40 by 9.20. It's a daily 1, 2, 3 on the BNED. Looks beautiful actually. DHI, beautiful hourly chart, but up a lot on the daily, so it's kind of difficult. Long over the base, stop under it. As a daily 1, 2, 3, or an hourly base breakout. So just an idea. 5 is down a lot, especially if you look at the monthly and the weekly. Monthly is right into that 200. Usually prices bounce off of the 200 when they reach it. So it's right there. On the weekly, it's pretty extended. So I'm thinking this should be higher, and the entry would be over 77.87 by 73.60, and target would be no more than 89. But that's still, you know, $10. It's more than 10, but let's just say $10 if it gets to the top. That's not bad. 3M is very, very sloppy, but I like it higher long term. So 3M is just a thing of beauty on the monthly and on the weekly also. The daily is a little bit sloppy, but it's setting up for a breakout. Also, Pfizer looks good long term. It's a little bit late now, but Pfizer looks like it might have bottomed as well. Okay, so that's the 3M. OKTA is daily buy setup, so I like it long over 94.73 with a stop under 92.64. The pays is very, very thin, but I like it higher over Friday's high, which is 532. Stop under the pivot, which is $5. So over 532. Stop under 5. If you look at the monthly, that's a thing of beauty on the monthly chart. Weekly is not bad either on the pace, but it's very, very illiquid. The shorts, I have CFLT 1, 2, 3, so short under 23.98 with a stop over 24.75. And then target, they have to zoom out the gap fill basically. No, the gap fill were already there. Somewhere down here, like around $22. It's a 1, 2, 3. CPNG is a little bit better, is also a 1, 2, 3, so short under 20 by 20, 25, 27. So it's $1.30. Target is about the 200, which is about 18.50, I would say, on the CPNG. EBS is different. That's a climactic sell setup, and I like the hourly chart quite a bit because it's rolling over. So short under the base here, under the support, stop right here. Now, safer would be to place the stop up there at the highs, but you know, it will be a big stop if we used the topping tail bars high. Target is the 20 MA, the rising 20 on the daily. This is a really pretty chart, the EBS. Flex is also a 1, 2, 3. The only issue is that it's above the 200, so I would expect it to get down to the 200 only. If you thought it could go through it and reach the prior support, then this would be a beauty. Like, I love it. But the limited target, because usually when price is above the 200 and falls down to the 200, it gets, you know, it gets a bounce off the 200. So that's kind of my target. And if it is your target, then there's not much reward to risk. If you think the target is somewhere down here, then there's plenty of reward to risk, in which case I would definitely play it. The LZ is a daily sell setup, hourly base breakdown, so short under 625. 624, stop over 675, target 535, the prior low. Okay, on the LZ. Shop is a weekly sell setup, daily 1, 2, 3, so short under 62.45 with a stop over 64.18, so 62.45 by 64.18, and target probably down here. On the Shopify, Snapchat is very similar to the Flex. It's above the 200. It's a 1, 2, 3, 4 pattern. So short, stop, target, but that's too little. Or maybe target down here, in which case it'd be lovely. But again, it depends on what your target is for the play. If it's the 200, then very little reward to risk. And that is my list for today. I scan every day after the close, so I generate a new list every single day. I do the video only once a week, so you get to see my list for Monday. But every day I have a new list, and sometimes, especially if the market moves, I get a brand new list. Like my symbols for the watches for tomorrow will be completely different than the watches for today. But we'll see what the market does. If you haven't found out by now, Joe Biden dropped or withdrew from re-election. Yep, Joe Biden officially drops out of the presidential race, endorses Harris. So that's probably going to have an impact on the market. You could almost see the writing on the wall. That's what I said in the room on Friday, but I have been saying that for a while, but especially on Friday, I pointed out how DJT, the Donald Trump stock, was crashing, even though on Thursday after the close was up like $2, was looking really bullish. But yet Friday before the open and throughout the day, it sold off. At the same time, Tesla started selling off. So I said in the room, You know, Biden saying he's looking forward to getting back on the campaign. I said, but the charts say otherwise. That's exactly what I said, word for word. The charts say otherwise. And it turns out somebody knew something for sure. Again, we don't know what impact that will have on the market. It will probably be short-lived, honestly. But that might add to the volatility that we saw last week, which is a good thing if you know what you're doing, because volatility is your friend if you know what you're doing as a trader. All right. That will do it for today. Thank you so much for sticking around till the end. I will see you on the next video. Best of luck with your trading this week. Take care, everybody. Talk to you soon.